Howdy there, Liberty lovers. Hope everybody's having a fantastical Thursday. It is March 30th, 2023. And you can see my buddy Jake back here. He's super excited. Baseball season has started. We're already a couple games into the season. Let's see who's already finished up for the day. The Yankees won 5-0 over the Giants. The Braves and Nationals are in the middle of the ninth. Braves are leading 7-2 over Washington. And the Red Sox are losing 8-2 to the Orioles. And so that's your baseball update for today. So hope everyone, like I said, is having a fantastical day out there. I'm super excited about baseball season. I love baseball. It's probably my favorite sport to watch. And I'm not a big fan of the whole pitch clock. I mean, these games are going super fast. I personally don't mind the slow pace of baseball, especially if I'm paying to go watch it, live in person. I don't mind if it takes 4 hours. I'm there just to watch the game. I mean, and I don't drink beer anymore, so it's not like I, get mad because they cut you off at the seventh inning. So anyways, all right. If it's your first time watching the Liberty Call, please give me some of these thumbs ups, likes, shares, hit that subscribe button. If you got a friend next to you who's not watching this, slap him in the face and say, hey, subscribe to the Liberty Call. Ray's trying to, educate you morons. All righty, let's go ahead and jump into the numbers for today. The Dow Jones was up 0.43%, 141 points, closed at 32,859. S&P 500 was up 0.55, closed at 4049. NASDAQ was up 0.73, closed at 12,013. VIX was basically flat. It was up a few percentage points earlier today. It was down 0.21. It's currently holding at 19.08. Canada was up 0.52. Brazil up 1.81. Mexico up 0.66. Our friends over in Western Europe, Germany up 1.26. UK up 0.74. France up 1.06. Netherlands up 0.93. Spain up 1.5. Italy up 1.05. Switzerland up 0.63. And Portugal up 2.1%. Russia was both exchanges were in the green. The MOEX up 0.21, RTSI up 0.19. And the overnights in Asia, almost all green. Starting out with the Nikkei in Japan was down 0.36. Australia up 1.02. New Zealand up 1.61. Starting out in China, the Shanghai was up 0.65. The Shenzhen component up 0.62. The China 50 up 1.23. The DJ Shanghai up 0.65, Hang Seng up 0.58, and the Taiwan weighted up 0.51. All right, so that was everything for the major markets across the globe for today. Again, I said this yesterday. I don't know why everyone's feeling so good that, hey, everything's fine. The Fed says they're only going to do maybe one more rate hike. Who knows? Inflation isn't that bad. It's only 6% or 5% or whatever number. It's like triple what the Fed would like to see. I personally would like to see some deflation occasionally. That would be nice. I'd like to spend less on things that I buy. But hey, it's just the way it is. All right, let's go ahead and take a look at today's market recap. S&P 500 drifts higher as tech continued to advance ahead of inflation data. All right, the S&P 500 rose Thursday with tech stocks leading the gains as investors awaited fresh inflation data. The impending report would offer insights into whether the Federal Reserve's rate hike regime would end sooner rather than later. Apple, Amazon, and Microsoft led the rally in big tech, but Alphabet saw a dip of about 0.5% or 0.5%. Alibaba continued to rise, increasing over 3% after announcing it would sell non-core assets and consider ceding control of some businesses. The Chinese tech giant had earlier said that it would divide its group into 6 businesses as part of a significant restructuring. According to Goldman Sachs, growth stocks have received support from the decline in bond yields year to date, with the investment bank recommending that investors, quote, own high margin growth stocks, end quote. Financials were one of the few sectors to register gains, with weakness in regional banks and a 5% plunge in Charles Schwab as Morgan Stanley downgraded the brokerage firm to equal weight from overweight. RH, a furniture chain, fell over 3% after reporting quarterly results that missed analyst estimates and offering gloomy guidance. The company warned of further impact from downturn in the housing market. On the economic front, jobless claims rose by 7% to 198,000 in the week ending March 25th, which was ahead of the forecast for a 5,000 person increase. Some economists are calling for a steep pickup in claims in the months ahead, and the cycle bottom is likely now in the past. Pantheon Macroeconomics noted in a report that the lagged impact of the surge in layoff announcements should drive claims significantly higher during the second quarter. The report came a day before the fresh core PCE data, the Fed's preferred inflation gauge, which is expected to show cooling price pressures and could support calls for the Fed to end its tightening cycle. President Joe Biden has urged regulators to reinstate rules that were rolled back by the Trump administration following the collapse of SVB and Signature Bank. Biden called for increased oversight on banks and to probe for weakness in the New York-based bank Metropolitan Bank due to its relations with the digital asset and crypto industry. The bank's shares fell over 30% as bearish bets against the company ramped up. Yeah, regulation, and we'll get to that in the third article. These people in Washington, all they want to do is just overregulate the hell out of us. And, maybe if we didn't do a Ponzi scheme banking system, with fractional reserve banking, we wouldn't run into these problems. But, since the banking system is forced, I assume banks could probably keep 100% of cash in reserves, but, they'd have to charge for their services. And, if there's no margins, it makes it a lot tougher. So, personally, I'm a fan of crypto. I like being my own bank if possible. The only thing I run into issues with is, what happens if you croak? How do you get into your wallet? Those sorts of things need to be solved. So, all right. Next up, article, U.S. weekly jobless claims climbed to 198,000. According to data from the Labor Department, the number of Americans filing for unemployment insurance rose to 198,000 in the week ending March 25th, up from an unrevised level of 191,000 in the previous week, and above economists' forecasts of 196,000. However, the number of first-time claims remains low on a historical basis. According to Kathy Jones, chief fixed income strategist at Charles Schwab, the 4-week moving average for claims, which aims to account for volatility in the data set, increased by 2,000 to 198,250, the highest mark in 10 weeks. Meanwhile, continuing claims edged up to 1.689 million from a downwardly revised total of 1.685 million in the previous week, slightly below economists' forecast of 1.697 million. So, about 8,000 better. Fed Chair Jerome Powell stated at a press conference last week that policymakers will continue to closely monitor U.S. jobs data in hopes that the potential loosening in the labor market may help bring down elevated inflation. Powell also mentioned that the recent turmoil in the financial services sector may weigh on demand for labor, which could impact households and small businesses, both key drivers of job growth. At the Fed's latest meeting, it raised borrowing costs. Yeah, we already know all that. Economists suggest that the tighter credit environment could lead to a slowdown in bank lending, which may in turn affect job growth. In other economic news, U.S. Economic growth for the fourth quarter of 22 was revised lower to 2.6%, according to final data from the Bureau of Economic Analysis. This figure marked a slowdown from an increase of 3.2% in the third quarter of last year. All right. So that was everything there. So jobs numbers still look good. But again, if you've been listening to me for a while and you've been paying attention, jobs numbers are a lagging indicator. Typically, businesses have to have a bunch of tight, months where they're either running tight or they're running in the red, and then they have to make a crucial decision. Hey, what do I do? How do I cut overhead? Hey, you're fired. So, that's, unfortunately, that's the way it is when you work for somebody else. All right, last up has to do with banking regulations. Elizabeth Warren's contradictory demands for easy money and strict financial regulation. Doesn't make sense. If you have easy money, you can't have strict rules. So, well, I guess you can, but, these fools always just write these rules so that they wind up screwing stuff up later. All right. SVB's recent collapse has triggered a debate for the need for tighter government regulations in the financial sector. Again, what would it have fixed? Either people are honest or they're not. Writing in the New York Times, Elizabeth Warren has blamed government's weakening of financial regulations for the bank's collapse and called for better regulation of the sector. Again, this woman has never had a real job. She's either worked for a university and, only got that job because she lied and said she was, at Cherokee or whatever bullshit. And then she's been, in Washington. So, people like this who've never had a real job, their opinions matter this much. zero. All right. However, the article's author, Michael Meharry, disagrees, saying Warren's advocacy for easy money and for financial sector reform to, quote, serve the little guy, end quote, are mutually exclusive. He argues that the 2008 financial meltdown and near crisis today are due to easy money from the Federal Reserve System rather than lack of regulation. Warren's demands are contradictory, according to Meharry, and he suggests that Warren lives in an economic netherworld where easy money equals responsible monetary management. Schiff argues that a financial system could be regulated by profits and losses with no government bailouts, easy money, or political favoritism, and that government interference will overpower natural market regulation. Meharry suggests that progressives such as Warren want a regulated banking cartel, which would greatly restrict bank lending to ensure that only the best customers receive loans. He adds that a history of financial and economic deregulation over the past 45 years has had very little to do with the ideology and more to do with mitigating the problems caused by the regulatory regimes themselves. Warren's demands extend beyond the financial sector and include advocating for rent controls while decrying housing shortages and demanding government enforce price controls for the rest of the economy. Again, this person's a moron. Again, it proves that anyone can get. I think she has a law degree, and that anyone can, if you go to college long enough. I mean, my own mother went to college for 7 years, and we usually call those people doctors, but I mean, she only wound up with a general education degree. But hey, that's the way things were back in the 70s. All right. She's also a leading voice for student loan forgiveness. Again, inflationary. Ignoring the facts that most student loan debt is held by the wealthy. The article concludes that Warren's contradictory demands and proposals make little sense to people grounded in casual realism. All right. Well, again, she is a moron. And I mean, anyone who would lie about your ethnicity just to get a job is just a piece of crap, in my opinion. So, all right. Well, that's everything I had for today. If you need anything from me as far as how to get your finances back in order, how to plan for retirement, whatever it might be. I mean, these are very simple solutions. All you got to do is call and ask. Go to dsafinancialgroup.com. All my contact information's there. I hope you have a wonderful evening. Please go watch a lot of baseball. I got 8 games on my screen right now. And have a wonderful evening. Talk to you next time. Adios.